What's up, guys? It's Rey-Jay back with another video. And in this one, I'm going to provide you guys with a very insightful video about what's happening with the markets. I'm going to talk about the Fed rate cuts, how this typically affects the market moving forward, what's happening historically to the markets, and what this means for us, at least moving forward. But let me just mention that I'm not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. Anyways, the market saw some very interesting volatility for the last couple of weeks. We saw the market basically dump really hard amidst all these fears about a recession, about all these war news and things like that. And as a result, instead of continuing to fall when everyone was turning really bearish, these market makers came out and they pumped the market right back up, forming a nice V-shaped recovery. Now, the question is, what's happening? Because we're getting very close to the potential Fed pivot. And if that happens, will that lead to the market continuing to squeeze? Is there going to be a sell off? What does history tell us? But first, we have to go back a little bit. So, what happened was there was this pandemic. It was very difficult. It's very hard to even talk about some of the atrocities that happened during the time. But I just want to say that it was very tough for everyday Americans. It was very tough for people all over the globe. And that led to this very big shift in monetary policy from the Federal Reserve and many other figures. And it led to a lot of money printing and a lot more spending by the government. So, all these different factors, I just named a couple of them, from spending to liquidity being injected into the systems, led to inflation going up. But there's so many factors. I just listed a couple of them. I'm not trying to go over everything, but I just want to say that inflation went up like crazy. We all could agree on that. So inflation went up like crazy, and the Fed has been raising rates for the past few years to bring inflation back down. Now, they're trying to do this as a result to slow down the economy and to do so many different things. Now, inflation has been falling like a rock according to data, but the thing is, the Fed has kept rates elevated. Many people argued that back in July during the FOMC meeting, the Fed should have done their first cuts then. Otherwise, the damage that's coming to the economy is about to be worse. However, the Fed disagreed and they're saying they want to react to data. So, it's up to them to decide. But I just want to say that right now, the most probable thing is we're going to get a cut in September right before the elections. So, the question is, what's happening with all of this? Why is the Fed about to cut? Well, it could depend on a lot of different factors. Oftentimes, historically, the Fed cuts, okay, when things start breaking in the economy, when we start to see a lot of the pain that's going on. The Fed is artificially trying to bring inflation down, but to do so, it oftentimes and almost indefinitely will lead to a recession. And that's what's leading to some fears. So unemployment is starting to go up. As you guys can see, the unemployment chart is still trending upwards. This is important because with non-farm payrolls starting to decrease and unemployment going up, this could point us closer to a recessionary environment, and this is projected to continue. Now, why is unemployment barely starting to really spike over the last few months compared to like earlier? And the answer is there's a lag effect. When the Fed raises rates, it doesn't affect the economy immediately. It could take 12 months, it could take 18 months, depending on studies. It takes a long time. So now unemployment is spiking. It's going up and up and up. It's going to continue to go up. Okay. And this could be very difficult for millions of Americans. People are going to start losing their jobs. And the economy is clearly slowing. We're seeing this in a lot of data. But what tends to happen historically, I'm going to show you guys something very interesting right here, is the Fed likes to cut either before or when things start breaking in the economy. Some could argue that the banking crisis we had earlier this year was the big catalyst. Others could say otherwise. I mean, it depends on a lot of different factors. But just to be very clear, we're about to get a cut soon, and this is what happens to the market historically. So we have this blue line here. This is the Fed fund futures rates. This is the rates. When the Fed cuts, when the highlight over here turns red, this is when the Fed started their cutting cycle, and the Fed started reducing rates. You can see how this affects the stock market. So going back to 2000, okay, we're going to go back just a couple of decades. When rates were elevated, all the way up here, the stock market was pushing with rates. Okay, things started breaking in the economy and the Fed started cutting, but the market was already starting to dip. And then with the Fed cutting, the stock market saw this crash before it started to recover. In 2008, we saw something very similar. Uh, Basically, the Fed had to elevate rates again, and then the market started crashing already. And then the Fed fund futures rate ended up following that with the pivot, and the market ended up coming down because we entered that recessionary environment. What about back in 2020? We were pumping like crazy. And then the Fed started cutting rates. They had to raise rates essentially, because of a lot of factors back in like 2018. There were instances where the market was kind of like apprehensive, but it was still pushing. And then we got this. The Fed had to cut rates again right over here, and as a result, the market started pushing up higher all over again since we had low interest rates. And then what happened was basically the Fed, they basically put us in a very, very interesting position. The market made a full recovery, started pumping even higher. Rates continued to go higher, but now they're about to pivot again. So it's just like this chart right here when the market was approaching all time highs, and then the Fed's getting ready to pivot. So, what do I think is going to happen? In my opinion, I think that what's happening is the market is bullish. And what tends to happen before the Fed pivots is the market remains bullish. And that's what happened every single time historically. So I think the market is going to remain bullish and we could get closer to all time highs now. If you look at the cycles we see in elections, this is actually aligning really well with this year because notice that if we go back to the S&P 500, when did the market start tanking? Okay. We had the all time high in July 16th, and between July 16th and August 5th, the market just was on a decline until it made a V shaped recovery in August. Well, notice how when I go back to this chart, when we look at this, the market is bullish. May, June, July tend to be bullish during these election years. This is a cyclical pattern. And then what happens is in mid July, the market starts tanking into the beginning of August, then it starts a rally, a V shaped recovery. Exactly what's happening right now, right? We're seeing the V shaped recovery. But what tends to happen during these election years is basically the market maintains this structure. We continue to push. We could even break to new all time highs that's happened before. And then as we get very, very close to September/October, the market starts another decline before we see a nice recovery for the end of the year. That's what generally happens during elections. And so far, that could be what's about to happen now. And what's interesting is we have the FOMC meeting on September 18th. Could that be the thing that triggers the market to kind of change its course? Could the market pump and squeeze approaching FOMC? Could that be the thing? Could that be the thing that kind of changes things? We'll have to wait and see. But regardless, even if we do get a big drop in the markets, we tend to be very, very bullish after the next, 1 year after the Fed cuts, a couple of years after, we tend to be very bullish anyways. So, what's my prediction for the markets? Well, like this chart is showing us, we tend to retrace from the middle of July, mid July, up until the beginning of August. And then we tend to see a V shaped recovery approaching September. In fact, we could even make new all time highs as we get closer to October. That's what the majority of these charts show us during the first term pre election years, and then also during the aggregate cycle. That's what tends to happen. And I think there's a good chance we're going to do something very similar. So, looking at SPY, we made a very, very nice V shaped recovery. We still have a lot of gaps below, but I'm not sure we're going to fill those gaps. And I think that there's a lot of manipulation with the way things are moving. People are panicking so much and they just squeeze us right back up like crazy. That's how fast the market moves. So I think what's the most likely possibility is as we approach that FOMC meeting, I actually have it marked right over here. Let me show you right here. The FOMC meeting happens to be on September 18th. It's like right here. We have quite some time until then, but if you look at the daily chart, it is possible we're going to form an inverse head and shoulders, and SPY is about to do something like this where it depends on what kind of reaction we get. Are they just going to blow us up to all-time highs like this, and then we just consolidate for a bit in a range before something else, before we see another major decline in the markets during this September to October cycle, and then, we just continue upwards from there? Could that be what the market's going to do? Or are we about to form kind of like an inverse head and shoulders? Just hypothetically, see how we have like a left shoulder here, we have a head down here. Is there about to be a pivot in the cycle after the FOMC minutes or such that comes out this week? Um, and do we dip down like this and then continue this rally into September or into like the end of August/September? And then just continue to try to push to new all-time highs like this into FOMC before we see a big reaction, depending on what the Fed ends up doing for the next cycle. Like, could the market be doing something like this, and then we just continue to squeeze? I personally don't think that we should call a crash or anything like that. I don't see a crash, but I think that's the most likely possibility that we're going to see some more upside and even an attempt to get to all-time highs by as we approach FOMC, most likely. And I think it's going to happen like this, where we have this inverse head and shoulders like structure, or maybe we don't dip much. It could just be a small dip and then we just continue. But the market's very bullish. You guys could clearly see we're very, very bullish right now. And we had a very, very vertical move to the upside. This is the most vertical we've seen the markets in years. This is even more vertical than what we saw during the bull run from last year, even like the big recovery move that the market made, right? So it's insane how much the market could really move. Remember that big jump we got back in September of last year, approaching like October? You could see how vertical the market was in November. This is even more vertical than that. So we're very bullish looking. I don't know if we're going to just break past 555 to 556 on SPY and then start filling this gap above, or if we're going to come down first and then do it. Regardless, the market looks like it wants to go to all-time highs again. So they might continue to squeeze things like crazy just to squeeze shorts. But like the cycle suggests, after the Fed cuts, generally it's because of a bunch of different factors. Could it be that we're about to see something contract in the economy? Is it because of a potential recession? Could the Fed know way more than what they're telling us, right? There's all these different factors. I just want to say that historically, when this happens, when the Fed gives us those cuts, we do tend to see a pullback. And that aligns very nicely with this. It doesn't have to be a crash, it could just be another pullback. And I think that this cycle makes a lot of sense, especially because like the mid July until like the first week of August sell off we got aligned perfectly, and the V shaped recovery is aligning perfectly as well. So I think that this is going to encompass how we move very closely. The market's bullish for now as we approach FOMC in mid September, but then we will see if Jerome Powell gives us that rug pull. We're going to be very, very careful with this because if things break in the economy, the recessionary fears could return. If unemployment goes up like crazy, if something happens, there's still fear that could build. The market is not objective. The market is not always truthful. The market is simply just manipulated by these big institutions, these market makers, and they do whatever they can to make money. So sometimes they will pump the market really hard and squeeze shorts because everyone started shorting the market thinking the crash was here. The crash lasted 3 days and then the market made a V shaped recovery. How funny was that? Right? We got this huge drop only to make a V shaped recovery in just a couple of days. How crazy is that? So I just want to say they're tricking you. They want you to turn super bearish some days only to pump us back up. And now if when the market makes this full recovery, when everyone turns really bullish, they might do the same thing, give us another quick rug pull. So I wanted to give you guys a warning about that. The catalyst that could switch things could be the Fed pivot or maybe shortly after. So I don't know for sure, but what I can tell you is that for now the charts remain bullish. SPY is bullish right now. So are many other tickers such as like Tesla and the QQQs, and we're going to likely continue that trend. QQQ looks bullish. We have a lot of gaps to fill. Let me just close these out real quick. We look very bullish, and I think we have a lot of upside left. Now, is it possible we're also forming like that inverse head and shoulders, and we kind of just consolidate like this? We dip back down, and then continue this nice rally going into the FOMC meeting like this. And then maybe after FOMC, we form like a cup and handle before anything else. Who knows, guys? Who knows? But approaching FOMC, I just want to say this: we look very bullish approaching it. We look very, very bullish, and we could be approaching these all-time highs way up here. That could be what we're about to do. Could our dip be very, very minor, and we just continue to pump very nicely? It all depends. And could we, if we do hit all-time highs, I'm going to remember these gaps down here because we could return to fill some of those gaps, possibly after FOMC, maybe during the October cycle, before a nice V-shaped recovery for the election. So there's a lot of factors that are affecting how this is going to move. This could even be just like a giant cup and handle too. So we'll see. I'm not trying to be super precise, use Fibonacci retracements. I'm just trying to make this as understandable as possible. That for now, okay, for now, the market is bullish. For now, we are still on an uptrend. If we just kind of like ignore some of these lines, as of right now, we are still in a bullish phase, and the market may be approaching these all-time highs again before we get to the FOMC meeting. Okay, so what do I think is going to happen? I think for now, SPY, QQQ, ES, futures, we're bullish. We are bullish right now. We're on a very, very nice uptrend. They tricked a lot of people. They're very, very cunning, these market makers, but it is what it is. And I personally think that this will have a big effect on how things continue to move. As far as SPY goes, the same setup could be developing. I think my line got deleted, but we'll see if we break 555 to 556 and just start pushing straight up to all-time highs. Will we recover like that for anything else and just try to make new all-time highs before FOMC and then we get the rug pull? Or are we not going to be this vertical? Is this a trap where we kind of push a little bit, then come back down to form the inverse head and shoulders and then start pushing to all-time highs right before FOMC? Who knows, guys? It's going to be likely one of those two, but that is what the cycle is kind of like showing us. All right. So the cycle's aligning very nicely. This is likely what the market could be doing. Uh, we'll be watching this resistance to see if this is like a inverse head and shoulders or not. Sometimes they just blow us off, especially when the market's this vertical. So we'll see. It is possible we don't even form the inverse head and shoulders and we just start squeezing. They keep squeezing things to all-time highs. I wouldn't rule that out. Look how fast they bought everything back up. So we'll see, but just know right now we're bullish. The market is bullish right now as we're in this August cycle. So right here in August, we tend to bottom, we start to rally. August through September, we tend to see upside in the markets. And then once FOMC comes, we'll see if that leads us to the next cycle where we start dipping, approaching October. And then we'll see if we form another recovery for the end of the year. All right. So I just want to give you guys a heads up about how things kind of look from my general view of the markets. Not promising that this is going to play out perfectly because I can't always predict what's going to happen 1 month out, 2 months out. I can't always predict everything, but I can tell you that whatever happens, happens, and we just have to watch our charts. But just know that this is kind of like what my general view is, and we'll see how things kind of progress from here. All right. So thank you all so much for listening. Hope you guys have a great day. I'll see you guys very soon on the next one. I'll go into a lot more detail about the markets in my next video. I'll be a lot more meticulous. Until then, I'll see you guys in the next one and peace out.